Alright, what is going on everybody on YouTube? Happy Sunday. Griffin here, coming back to you guys with, of course, another Sunday Stock Watch. First and foremost, if you're new to the channel, definitely consider hitting that subscribe button below. We'd love to add you to our awesome community of like-minded individuals. Here we're all about, obviously, day trading, investing in the stock market, options trading specifically, but any way to make money in the stock market. And obviously long term we'll start talking a little bit more about real estate and all that type of stuff. Just ways to create sources of passive income and just ultimately with the goal of building a bunch of wealth, obviously at the end of the day. Indestructible wealth, as I like to refer to it. Wealth that cannot be destroyed. So if you're into that kind of thing, we don't do any get rich quick or anything like that. So if you're into that, go find somebody else. But if you want to join, again, a community of a bunch of like-minded individuals, you can see if a couple just hopped in. How's it going there, Josh and Clint? Like I said, hit the subscribe button, and while you're at it, we have a Discord group chat with about a little over 40 members in there now. Down in the description box, it's totally free. I don't charge for like any of my chats or anything. I only have one chat, obviously, but I don't charge for any of that. So, and like I said, we're getting close actually to that 500 subscribers. I'm starting to wonder if I'm going to have to order a couple books to send somebody, because we're at about a 465, something like that, 463 I think to be exact, subscribers as of this morning. So if we get to 500, like I said, before the end of the year, I'm going to pick somebody. What I'll probably end up doing actually is picking 3 people out of the chat, and I'll let you guys kind of pick a book that you want, and then I'll just send that book to you. But the 3 books are going to be Grant Cardone's Millionaire Booklet, Rich Dad Poor Dad by Robert Kiyosaki, and Crushing It by Gary Vaynerchuk. So, like I said, if we can get to 500, I will definitely do that stream before the end of the year, right around Christmas time, of course. But like I said in the Discord group chat, those of you that knew I was hopping on, I said that by all means, definitely have any ticker symbols or anything like that ready that you want me to take a look at, and let me know what you're kind of thinking. Don't just shout out, like, just don't just put the ticker symbol, but let me know kind of what you're feeling about it before you put it there, so I know kind of if I can see what you see. Because my type of trading is obviously more the options trading, vertical spreads, iron condors, even an occasional call or put here and there, of course. So I'm going to automatically think of it from that standpoint. Sorry about that. But you might be thinking of it as a swing trade, a long-term investment, a possible day trade. Probably not a day trade you probably won't call out, but something that you might have just in general a different outlook on that stock. So whenever you call out a ticker, all I ask is you just kind of let me know what you think about the stock. I'm not going to tell you that you need to give me a support, resistance, all that stuff. All I ask is what do you think about the stock, and then I'll let you know if I agree with you, or what I would do differently to maybe try to get the maximum profit but still have a good safe chance of getting that good profit too, of course. But with that being said, I'll go ahead, make sure real quick that we're doing all right on the YouTube end. Got 3 of you already. That's awesome stuff. And like I always say, sometimes I forget to just check our stream health and make sure we're doing all right. So if I do ever have any streaming issues, definitely feel free to just let me know as soon as any of you guys start having an issue. Video quality I can't really do much about. A lot of times it's your all's internet, in all honesty. But like if there's any echoing or microphone issues, stuff like that, definitely let me know. But with that being said, we'll finally hop into just kind of what I'm obviously in right now. As you can see, I'm up on my 2 positions, 75% chance of profit, 91% chance of profit. The only one that I'm a little bit worried about, I wouldn't even say worried about necessarily, is just IWM. I'm definitely going to be keeping my eye on futures a little bit tonight. In all honesty, I hope that the futures open just slightly down, because Josh actually called out in the Discord group chat, China apparently is blabbering their mouth off about some stuff with that woman, I think it was a woman, that got arrested over, what, a few days ago, on Friday, I believe, Thursday or Friday it happened. They keep on mouthing off about that. So if anything, I would be encouraged to see just a little tiny, I'm not talking like 1/4%, I mean, I'm talking maybe 1/10% down right at the opening of the futures, because then in all honesty, we'll probably see some sort of a red to green overnight type of gap fill, and then we'll probably go green throughout the day, which right now I'm looking at IWM, of course, which is an ETF of the Russell 2000. And obviously, what made this trade attractive to me? Well, first and foremost, it got down to pretty much 1 year lows. We're around 143, I believe, briefly. Yeah, 143.27. And right around here, actually, right here, I believe it was, because it was later in the afternoon. So yeah, 2:30 my time was around when I actually placed the trade, because I saw this little double bottom starting to form, and I was like, okay, you know what? I'm gonna go ahead and hop in a vertical spread. I'm gonna hop in a bullish vertical spread. I was like, I think 143 is probably gonna act as a support. Oh, you got hit by PDT too, Josh? I heard sound like your mother did, but I didn't know you did too. Man, that sucks. Sounds like it's time for you to hop on over to Tastyworks. But which, by the way, for those of you that are wondering, this platform, because I know we get a lot of new people tuning in, this is Tastyworks. Before you even consider like maybe using them, definitely check the guy. I don't know about you guys, but whenever I'm using smaller platforms or businesses in general, I like to know who I'm working with. And these guys actually have an awesome YouTube channel called Tasty Trade with, I believe, a little over 100,000, or maybe even 2 or 3 now, 100,000 subscribers. So if you want, they have a bunch of awesome options videos as well. And this platform is geared more towards the option trader, but you can definitely trade stock on here and whatnot too if you want. But I do have a link down in the description box where it lays out all their commissions and fees. That's what I was just getting to. In that link they lay out exactly how the commissions work for trading stocks, trading options, futures, all that stuff. But usually it's like, what is it, 50 cents, I believe, 50 cents per leg of a contract, maybe $1. I think it's 50 cents though, if I remember right, 50 cents per leg of options. Like if you just did a call, I believe it's like 50 cents. If you did a vertical spread after the commissions and fees, it's going to be like $1.53 or something like that, because the fees are usually always around 25 to 50 cents, and then the commissions, they're 50 cents per leg too, I believe. I think it's 50 cents per leg. It's really cheap either way. Like for my vertical spread, if I remember right, it was like $1.27 or $1.53, something like that. And when my profit's going to be $20, $30, that $1 I'm not really, $1 or $2 I'm not really worrying about. Now with iron condors, that's where it can get a little more complicated, because obviously the more legs you add, the more fees and commissions you're going to pay. The fees and commissions on iron condor are like $4.54 or something like that. So that's another reason why I like vertical spreads over iron condors, FYI. You save a little bit on the fees, which obviously translates into more profit. But so yeah, there is a link down in the description box if you are interested in Tastyworks, and it lays it all out, and you're not going to have me just guessing. It'll lay it out perfectly there for you. But yes, I did find a little bit, looks like a little bit of support right around, just above 143 actually. And you can see I went ahead and put some alerts. I don't even remember the exact alerts I put. I think I put it for if it started to come down near my price, because you can see that my position on IWM is the 139.50 and 140.50. So pretty much as long as this stays above, I believe it was like, to be exact, right around 140.20, something like that. As long as it stays above 140.20-ish, I will get to collect premium, obviously. So what I did was I set some alerts just above. I think I set them a little bit higher, like 141, 142, just so I would kind of be aware, kind of if shit started really hitting the fan, because then it would break the 1 year support of around 142. So once it goes below, like well below 142.50, I definitely want to know, because I think by then the overall market would just be dumping at that point, because SPX we're at, which is pretty much like SPY as well, we know that, was it 2620 is like an ultimate support for SPX, which I don't know what that exactly translates to for SPY. I believe it's like 252, something like that. So That's going to be really interesting to watch this week, as of course right now we're only at 26.33. So definitely going to be interesting to see what happens the next day or two. But in general, why did I take this position? Like I said, we're pretty much at the 1 year lows, a really ultimate support level, and I just saw the risk versus reward. I thought, you know what, I'm going to go ahead and hop in, and if anything, if worse comes to worse, I'll hop out of the trade early. Like I said, I'm probably not going to hold till end. There's almost zero benefit till holding till expiration anyways. I've come to realize. So I'm not as long as I can hold these weeklies for 1, 2, maybe even 3 days. It's just about how much of the profit can I collect. If by tomorrow I collect 50% of the profit, but it looks like the trade may start to go against me, then why wouldn't I get out of the trade? I'm up, I might as well take the profits and run, right? So that is my take on just expiration and whatnot. But yes, overall I do feel pretty good about that position. 75% chance of profit also isn't that bad. Of course, that potential for profit is based on holding to expiration, so you need to keep that in mind. And then this trade with EWZ, we'll go ahead and get that chart pulled up real quick. EWZ, of course, is like an ETF of kind of like Brazil's market, so to speak. Not necessarily their market, but you can look it up and whatnot. I don't really give a damn about the details. But what I liked about this trade, I actually placed it. It was a short call vertical spread, which obviously is a little bit more of a bearish assumption. And why did I place that? Well, when I placed it, it was actually pretty early on in the day. We'll go back to the 1 day. I actually placed it pretty early on when it was around 40 bucks, if I recall, which is why I'm up decently on the position, because obviously as it continues to go down, I'm going to collect more profit, collect more of the profit. Like out of the total premium, I'm going to collect more and more because the trade is going exactly how I need it to. It's pretty much showing that it's going to stay well below the 41.50 that my position is, because pretty much as long as it stays above like 41.20, right? 41, yeah, right around 41.20, it's good. And as you can see, it's like about $3 off of that. And this, what I also liked, it's not really, at least recently, it's not super volatile. Obviously, it had a pretty big drop off. You can see it's been known for some pretty big drop offs. But when we look here, this is what I really like to look at. It was about the last 2 months? Yeah, just over 2 months. It's kind of just been in this range between 37 and 41, right around 41, which is why I chose the 41.50 position, because you can see, even though we reached like 42 once or twice, our highs have begun to start to kind of get lower each time. So when I saw it got rejected around 40, I was like, okay, this would probably be a good time to place that position, and I gave myself a little bit more room. I was like, because let's be real, obviously it could double bottom here and start to go back bullish, but so I wanted to give myself that room, but obviously I wasn't going to get crazy and go up to the 42, because then the premium just wasn't going to be worth it, and it's just for a weekly, it's not worth really doing in my opinion. But so what am I going to do? I'm probably going to close this position, I would assume, by Tuesday. I don't know. We'll see what happens tomorrow, how much premium I'll have. But I'm assuming by like Tuesday, I'll collect premium on this position. And then depending on where it's at, assuming that it's going to keep doing this number, which is what I'm assuming it's going to do. I think we probably are going to go well under $38 probably in the next 2 days or so. I think it might bounce right off 38, but who knows, it might come down all the way to 37.49. But either way, assuming that it does that, then I would turn around and probably do a short put vertical spread. Why? Because this is just an awesome trading pattern. This pattern is awesome for premium collectors. Anything that trades sideways is premium collector's dream, right? Because as long as it stays sideways, we make money at the end of the day. Let's see. Come back. You don't necessarily, that's the thing too, is like, I know, yeah, obviously I'm doing like a lot different trades. These have a lot better potential for profit, which is why I'm doing them. You can see 90, as of now, when I placed the trade, it was like 84% chance of profit or something. This one was like 70, 71. So I mean, they've gone up, but still, I mean, 70, 80, 90% chance of profit. Those are awesome potential chances for profit. I'm already up decently on the positions. This one I'm not up a lot. I mean, $2. I mean, it's about, I forget how large this position is actually, but I want to say 1% maybe. But that was in one day, so 1% a day, like I always say, is the goal. But it's definitely a lot safer. And since Searchu, I know it's been a while, I'm just going to go ahead and kind of show you what I'm talking about. So let's just say right now, in theory, just based off of what's happened, like, don't think about what I said a minute ago about like where the support is at $38. Let's just say, obviously, it had a pretty bearish day on Friday, as did most of the market. So what I would do in this case, again, this is just an example. So what I'm going to do, we're already on EWZ, so I'm going to go over here to trade. And what I like to do is usually the weeklies, maybe bi-weekly at the most, but I'll stick with the weekly on this one. So since it was bearish, and I think it's probably going to go up over the next couple days, day or two, whatever. Again, this is just an example. I don't necessarily think that's going to happen. I'm just doing it again just for example purpose. But I'm going to do a short put vertical spread, which is a bullish assumption, meaning that I think it's going to stay at or above a certain price. So what I would do in this case is go out. I like to hang around 85 to 90+%. So in this case, and what I started doing too, when I first did a vertical spread, I put them side by side like this. Now what I'm kind of doing, watch what happens here. The potential for profit, it'll drop sometimes. Your potential for profit will drop if you spread it this way, because obviously you're getting closer to in the money on the trade. But if you were to say come up to the 37 and then like right now 93% chance of profit, and then obviously if you go out, your potential for profit's going to go up because you're getting closer, further away from the money. Your premium's going to go up, which would mean, let's see, so your premium 13 cents, that'd mean you would have until what, 36.87, something like that would roughly be your break-even point. But like this one, for example, 93, you're never going to get the midpoint. Let's just say you got 11. And of course, these prices would change tomorrow. But you'd have a 93% chance to make $8 off of a roughly $90 to $91 investment. So that's roughly, what, 8%? Something like that? What the hell? Uh-oh. The futures just open. An SPX. What the hell? What was that? I was wondering, I was like, did the futures just open? 26.05. Or, here, let me see something. Let me see what my watch says. Yeah, it's the futures. ES. Look at the futures. The futures just opened up, and it's not looking good. Wow. Dropped down to 26.17. So it's going to be interesting. Like I said, I'm going to be watching this pretty closely overnight. I did not want it to drop necessarily about 0.75% right at the open. But we shall see. That will be very interesting to say the least. Let's go to the 1 year so you guys can kind of see what I'm talking about here. So you can see obviously 25.29. These are your rare, like obviously it dropped there briefly. But like I said, 26.20, that is a very key level. So I mean, if we hold below this, like below where we're at right now, it could get pretty nasty quickly. So that's going to be interesting to see if they push it back up over 26.20 or not. But man, that's nuts. Anyways, with that being said, let's go back to EWZ. So EWZ, in this case, the trade I would consider doing, well, I wouldn't consider doing at this moment, but this one right here, we have about a 90% chance of profit. Again, you want to always go a little bit closer. You don't have to go all the way down to the downside, but always try to get it usually in between your midpoint and the low point. So this trade, for example, we would have about a 90% chance to make roughly a $15 profit off of about an $85 investment. So I mean, let's pull up the calculator. And again, this is not, I'm not saying to place this trade, anything like that. This is strictly just for an example for anyone that's new. And I know Serchu, I know he doesn't really like have experience with this yet, so I'm just kind of trying to just lay it out. So 1473 off of, after your commissions and fees, will be roughly a, let's just say $85 investment. So you have an almost 90% chance to make 17% on your money. So that's definitely not bad. And then of course, like I said, this is based on you more than likely having to hold till expiration. I don't necessarily suggest holding till expiration. You can usually collect 60 to 80, sometimes even 90% of that profit within a couple of days of placing the trade. So I mean, why would you hold it, like hold out, gamble essentially, just to collect, I mean, in this case it'd be $1. So I mean, you're risking all that profit, not to mention your investment you're putting up, for $1, for just to collect 10% more of your profit. Not 10% profit, but 10% of the potential of profit, which like I said, here would be about $1.40. Like, you just have to keep everything in perspective. That's why I said, like, with these positions, especially this one, the EWZ trade, I mean, like I said, if it looks like it's not even going to be close, then yeah. I mean, why wouldn't I just go ahead, like, say it's Thursday, and for some reason I haven't already collected 90% or something of the premium, and it looks like say Thursday comes around, because this will expire Friday. Say Thursday comes around and for some reason I've only collected about 70% of the premium, which isn't going to happen, but say it did. I would go ahead and hold till the expiration if it looked like there was no chance of snowball's hell. I had like a 95-99% chance of profit, and I would go ahead and collect the full premium. In that case, I would, but that, it just doesn't happen. But there are always those one-offs, but for the most part, you're not going to want to necessarily hold till expiration. Let's see. Yeah, I mean, it is similar to regular options because obviously you still want it to move in your favor, but it doesn't have, I mean, like, it doesn't have to necessarily, like this EWZ trade I have right now, it doesn't have to keep going down. I mean, if it does, awesome. I want it to. That way I can collect my profit faster. Essentially, if it keeps going the direction you need to, you're just going to collect your profit faster than if you held till expiration. Like say it ended the day Friday around $39.40, I'd probably only be up about $6 or $7 right now. But since it kept going down, my profit out of the total max profit that I can collect, which I believe is like $25 or something like that, I've already collected. If I were to close, I would have collected already about 50% of that profit. So I mean, the fact that it has gone my way faster is good, but as long as it stays below roughly, like I said, what 40, 80 or 40, I don't even remember exactly, but like 40, 80 roughly, as long as it stays, or I mean 41, 20, something like that, as long as it stays below that, I will collect money. Whereas when you're doing regular options, like you mentioned, Serchu, with regular options, you only have like a max potential profit, usually of roughly a third, like 33%. Why? Because pretty much everything has to go in your favor. You need it to, if you're placing a put, you need it to drop and drop quickly. If you're placing a call, you need it to go up and go up fairly quickly, because theta is working against you, or when you're selling, which is what we're doing, when you're selling a vertical spread, you're collecting and theta actually works in your favor. So as long as it stays below, like I said, that price, since this is a bearish, if it stays below, no matter how quick it moves, just as long as it stays below that by expiration, you would collect all that premium. But hopefully that kind of makes sense. Like pretty much you have 2 to 3 times the likely chance of making money versus the calls and puts, where it's like you need it to move in your favor, the direction that you're expecting it to, quickly, because theta will start burning you alive. what are the major differences? Let me know if, because I'm trying to like kind of go one by one. I think I kind of covered a little bit what the differences are, but let me know if you need any more clarification. Spread to me. No, not necessarily. Because like when I do a spread, I put, like, you can see I have two positions in here. I bought 2 of the spread. So like if I'm confident in the spread to begin with, which I was, I had an 84% chance of profit, then I'm willing to put a little bit more capital into this trade, which is why I had 2 of these vertical spreads. It's not, like I said, the only thing that you need to worry about when you're first starting out with vertical spreads is, as long as it stays, like in this case I have a short call vertical spread again, which is a bearish assumption, meaning I'm thinking it's going to stay under $41. As long as it stays under $41, as long as I hold this position, I will keep collecting premium. And if you do a short put vertical spread, say I did a short put and I thought it would stay above 41, then as long as it would stay above $41, I would collect premium. Now obviously, again, if it goes, in this case, if it keeps just dropping like a rock, then yes, I'm going to collect my premium much faster than I would if it just kind of hung around a certain price point, because then I'm just essentially waiting for the theta to kick in and start making my money there, as well as the time decay works in my favor. But obviously whenever you do your vertical spread, you want it to go the direction, but it doesn't necessarily have to. It can trade sideways and you will make profit. Just like with the iron condor, the ideal scenario is that it trades sideways within your range of whatever price on the low end and whatever price on the high end. Investopedia. See, I never really hopped on Investopedia too much, but I have quite a few actually videos about these two now. Search you if you want to check those out. And I actually, speaking of that, I need to update my stock market lesson playlist, because I know it's been a while since I've updated that playlist. But I do have a bunch of videos about like my first vertical spread that I placed, a bunch of that stuff. So it's telling me right now we got 7 of you guys tuning in. That's awesome stuff. It's telling me though on my end that we are having some low video output, so let me know if you guys are having any issues on your all's end as well. But like I said, the whole point of this stream, guys, is not just for me to just talk about what I'm doing. Is there any ticker symbol stocks, is what ticker symbols are for those of you that are new? Are there any stocks that you guys are taking a look at right now that maybe you want a second opinion on? And when you call out a stock, you don't have to like give me all the details. Just tell me what the stock is and what you're thinking about doing, because when I think about it, I'm going to be thinking options, but you might be thinking a day trade, swing trade, something like that. So if you have a stock you want me to take a look at, just shout it out there in the chat. And when you do it, just like I said, tell me kind of what you're thinking about the stock, and if you're considering trading it for a long-term investment, a swing trade, a day trade, an option trade, iron condor, vertical spread, anything like that. Just let me know kind of what you're thinking about the position that you're looking at. And like I said, I know we got a lot of new people tuning in. I mentioned the stock market lesson playlist. I'm going to be updating that actually as soon as I get done with this video, because I know a lot of people look in those playlists because it keeps everything more organized. So you can check that out here in a few minutes whenever we wrap this stream up. And if you're new to the channel, definitely consider, like I said, hitting that subscribe button below. I know we got, it looks like about 7 or so of us in here right now, 6 apparently. So we'd love to add you to our awesome community, like-minded individuals. And if any of you are not already in our Discord group chat, it's totally free. It's easy to sign up. It's down in the description box. There's an app for it that you can download on your iPhone, Google, whatever phone, Android you have. All it does, I believe, is asks for your, I think it might ask for your phone number just to make sure you're not a robot, but they don't text you or anything like that. So you don't have to worry about any of that stuff. Let me check out oil, by the way. Oil is down, not a whole lot, nothing worth really mentioning. But like I said, I'm really interested to see what's going to happen with the S&P 500 futures overnight, because, man, it just had a sudden drop off here. Let me see, but like I said, I mean, it might. What's going to be interesting though is now that we broke 2620, I look for right around 2620, 2625 to act as a pretty strong resistance now. It's trying to come back. It's at 2619 right now, but man, that was not what we needed by any means. Let me actually pull up the futures overall really quickly on investing.com, which is a pretty nice website too, by the way. Let's see, she seeks bail, cities health, cites health fears. Oh God. Anyways, let's see. Futures down. I want to see all the futures. I forget how to get to the future. There we go. Indices futures. Dow futures down 200 points. CNBC just said. What's the reason behind it? Points as sell-off looks to continue into the next week. Wow. So let's see here. Dow 30. This is not the futures, is it? Yeah, this is the futures. Okay. So yeah, futures down about 200 points right now. Get you guys pulled back up here. Futures are down roughly 3/4% all the way across. Small caps are, which is of course what I'm wanting to look at the most, because I'm IWM. This is your Russell 2000, so to speak. So it's down roughly 0.6%. So what would that mean for me? If it's down 0.6% from close, that would mean roughly 142.95. So I mean, that's not necessarily the end of the world, because I have until 139. And that's the thing too. Like I said, whenever you start to spread your vertical spread, you allow yourself to go a little bit further down the options chain with your strike prices. So the fact that I have roughly $5 from the close is going to help me a lot in that position as well. But by all means, I don't want to see the market down. I think it's really important actually for tomorrow to be an up day, in all honesty. Like I said, it's gonna be interesting to see if we open below 2620. I think if we open below 2620, we're gonna see a massive dump tomorrow. I'm just saying. I wouldn't be surprised if, like, on the Dow we'd be down 1,000 points. I know that seems like a massive drop, but I mean, we've seen it multiple times, so it just would not be a surprise. But I'll be watching that pretty closely. And don't get worried. I'm not trying to worry anybody. I'm just saying 2620 is a pretty, I mean, most people across the board agree. Some say 2622. I like rounding down to tens. 2620 is a very, very critical point for the S&P specific, S&P 500, but that's a very critical point in general, just for the overall markets. Because once one of them starts to break down, they all start to just tumble down with it. So 2618. So yeah, that'll be pretty interesting to see. Tomorrow, it looks like somebody just replied to a comment or something. I know somebody commented the other night on a video, and I replied earlier. But I mean, if you guys don't have any ticker symbols or anything you want me to take a look at, then I guess I will go ahead and just start wrapping the stream up. Like I said, the whole point of me doing this stream is for me to, like I said, just communicate with you guys. Don't ever be afraid to shout a question out or shout any ticker symbols out there in the chat. That's what the whole Sunday Stock Watch is all about. Be very cautious buying any stock or being low. Yeah, because Clint gets it. I mean, I'm not, like I said, I'm not trying to, I mean, I'm usually one of the biggest bulls that it comes, but I mean, you just have to take a look at reality sometimes. And I mean, it's, like I said, it's not a necessarily make or break, but I mean, we've got a lot of room to the downside. I mean, we're not even starting to show oversold on the 180-day chart, and on the 1 year, I'm pretty sure we're not either. Or this is the 1 year. We're not showing any signs that we're beginning to be oversold. I mean, we're not overbought by any means anymore, but like we were back in January. But the market definitely does not look strong right now. I mean, it's not looking very good, to say the least. It'll be interesting to see. No. I'm waiting for GE, in all honesty, just to get removed from the S&P 500. That'd be, I don't even, I mean, let's take a look at GE real quick. How low is it now? Like $7? What's it at? Yes, that was just a guess. $7. I don't even look at it, in all honesty. It does have the dividend. Man, a whopping penny. Watch out. Has a dividend coming up. I'll take a look at Facebook here in a sec. But me too, by the way. I do think it's gonna keep falling. My grandpa over the holidays was talking about buying, and I said, dude, don't touch it till it goes under $100, because that's where I think it's going, under $100. But GE, I mean, no, man. I mean, there's so many other things you can invest in. I mean, it got removed from the Dow 30 for a reason, and it's just trash, dude. I mean, there's no signs, there's no leadership there. There's no reason to really have faith. Like, if there was actually a reason to have faith in GE, then maybe. But I mean, I don't want to base trades based off faith, because look what happened to JCPenney. People started getting faith in JCPenney whenever they got a new CEO. When was that? Was that a year ago or a little? I forget how long ago it was. But people had faith in JCPenney when that happened. Look what happened. Still went from, over time, $12 down to $1. So I mean, it's down what, 90%, something like that, from the 3-year highs. So I mean, it's just not worth it. GE, JCPenney, those type of companies, Sprint. I mean, obviously Sprint, it sounds like, is going to be merging with T-Mobile here before long anyways. But just those companies, what used to be companies is what I like to call them, they're just not worth it. I mean, they're not going to revive. Sears Holdings, what is theirs? SHLD? Is that what it is? Yeah. Damn. See, it's been so long, I almost forgot. Oh, did they go ahead and do the bankruptcy recently? So I guess, can you not even trade Sears anymore? SHLDQ, maybe? Is this it? I don't know. Either way, like those, point being is those what used to be companies, they're what used to be for a reason. I mean, just don't touch them. There's so many. If you want to look at companies that I think seriously are going to be here actually 10, 20 years from now that have a potential to keep going up. Under Armour, that's one, for example. You can see it's finally starting to show a sign of an uptrend. Twitter, another one that it came down for the longest and it's finally starting to find its way on back up. Even though now, like Clint even said, now is just not the time to necessarily be looking necessarily for long-term trades. I would kind of just wait this market out. Obviously, like I said, I'm a bull. I mean, when I go by what Warren Buffett says when he says, when others are greedy, be fearful, be taking positions off the table, and when others are fearful, be the gazelle. Go all in, find some deals, and make some money. But right now, like I said, we're just in a kind of a strange time right now. Kind of feels a little bit like back in January, February, where we knew it was coming, and it just kept going for a few days there, a few weeks or whatever, however long it ended up going. But we know the big one's coming, we just don't know when. That's why I'm saying it's kind of those buyer beware, be aware positions. Just be aware, be ready to pull out if needed. But I mean, now is the time, if anything, to be investing in those companies that you know are going to be here 20 years from now, is what I'm saying. Nike, for example, another one. Though I wouldn't right now. $73 is not an attractive price for me. What's Coca-Cola's KO? Yeah. still not very. To me, it needs to come down to about. It needs to come retrace down to 47 before I'd look at it. But just don't be hopping in like risky stocks is all I'm saying. Unless if you're doing those short-term day trades. But by how you kind of phrased it, where you said, will it rise again? I think you're looking kind of more long-term IM Solar. And no, long-term GE, I think it's a JCPenney story. I think here in about a year it's going to be worth $1, $2. So, sad, but true. I mean, I have a few GE products, and I still buy GE products. I think my fans, no, they're not GE. But I know I do have some GE products around my house, and I buy GE stuff, GE and Insignia, all those little cheap brands all the time. But I mean, their business is broke. It just is what it is. But Facebook looks like, yeah, broke the ultimate support of about 155 a few months ago. I look for it to probably, it looks like it tried to build some support around 131. Why? Because it was a pretty strong resistance, and then it got rejected. I think if we break 131, 130 to 131 again, we're probably going to, again, have a little bit of support back around 125, which is where that really bounced. But I think we're, like I said, I think we're going to retrace to 115 down to possibly a little bit under $100 by the time all is said and done. So, I mean, I agree with you, Clint. It's going to be interesting to see. Yeah, it got rejected. You can see right here. It got rejected right around 144. When's the earnings? About a month and a half from now. Yeah, I think it's gonna go down. I think that what's that product that came out with the? I've seen a lot of commercials for it. Damn, what the hell is it called? The thing where people, you guys have probably seen the commercial too. See, I don't even remember the damn name of it. How am I gonna buy something I don't even know the name of? That's how bad Facebook's business plan is. But I do think whatever the hell the name of it is gonna help their earnings a little bit. Though I think they've spent so much money in advertising and might offset it. But I don't know. I just think Facebook's got some internal issues. If we're comparing like all the social media companies, I like Twitter the most right now, in all honesty. I don't really use Twitter a lot. I should use it a lot more, but I don't really use it a lot. But a lot of people still do, and there's a lot of money within that company for God knows what reason. When you look at their balance sheets and everything, Twitter just outdoes Snapchat and Facebook. So, out of all three, I like Twitter the best. I don't own Twitter or anything, like any shares of Twitter or anything like that, but I do like Twitter the most out of all the social media companies. But like I said, definitely be careful holding anything right now. Kind of like what Clint was talking about there a minute ago. I mean, the one good thing with this market is when you look at the actual stocks, everything that's down, everything is down so big, everything is screaming oversold. I mean, Apple, screaming oversold. I mean, it looks like it could come down a little bit more. This is the 3-year chart, of course. I'm more interested in like the 1 year. 1 year starting to show slightly oversold. Though I do think Apple's probably going to come down to about 150, 160. Maybe find some support around 165, but if it breaks 165, it's coming back down to 160, guys. But what I'm saying is when you look around most of the market, I mean, Snapchat's not a big company, I don't know why I even put that in, but like I mean, the semiconductors, just everything right now. I'm surprised, in all honesty. AMD has kind of proved me wrong a little bit. I still think it's coming down long term. I think within next year it's going to be back under $10, but it's hanging in there. But like SQ, it's down, what, 40% right now. Apple, like we were talking about, it's down from all-time highs, what, $50? No, almost $60, $70 off all-time highs, which is roughly, what, not quite 30%, 20, 25. My math kind of sucks right now. 25% roughly. Roku, a lot of tech specifically has just been getting hammered. So Uber and I heard Uber and Lyft sounds like they're finally going to pull the trigger in 2019 and have their IPOs. So that's going to be interesting. But I know Josh, he's into the CL and the M because they pay a monthly dividend. I thought, was it CLM that he said? I don't see a dividend on here. CL, I know he said like CLM, CL, I forget the damn stock. I thought it's CLM. I don't know why it's not showing a dividend on here. Maybe if I go to like the 180 day. Yeah, it still doesn't show the dividend. But this is another one. The only thing I don't like about it is downward trend. And I didn't even draw it that good. I mean, it might retrace back up near 12, 13, right around $13, but it is on a downward trend. But I did hear from Josh, I believe it's this one, he can tell me if I'm wrong, but I think it's this one. He said pays like a monthly dividend, so if you're into those dividends, definitely check that out. But I mean, just overall market wide, the good thing is that most everything is showing massive oversold. There are a few stocks and a few sectors hanging in there, but most of the market is just screaming oversold, screaming on sale. So it'll just be kind of interesting to watch what unfolds this upcoming week. I think this week, it feels like we say this almost every week, especially since like October, but I feel like, I mean, this week going into almost Christmas, it's going to be a pretty big week. Is the right stock? Okay, I was just making sure. But I mean, this week is a pretty big week in general. So I'll be watching this pretty closely, and I will be chatting it up with some of you in Discord while we kind of just watch what unfolds over the next 16 hours or so. But like I said, if you're new to the channel and this is your first time tuning into a stream, we love to have you and add you to our awesome community of like-minded individuals. So definitely consider hitting that subscribe button below. And like I said before I end the stream, if we do somehow hit 500 subscribers before the end of the year, I'm going to do a special stream, and I'm going to pick a couple winners out of that stream in the chat, force you guys to get in the chat a little bit. And I'm going to send 3 books out. Rich Dad Poor Dad by Robert Kiyosaki. Gary Vaynerchuk's Crushing It, almost forgot the name of it, and The Millionaire Booklet by Grant Cardone. I'm thinking of so many books. I just bought Think and Grow Rich, which, by the way, for those of you that are resellers, you might want to check out your Barnes & Noble, because Think and Grow Rich at Barnes & Noble right now, like my local one, had hundreds of copies for about $8, and they'll give you like a 10% off coupon. At least the woman that was there did, which made it like $6.80 something. And this resells on Amazon for about $15, which I did the little calculation thing in the Amazon seller app, which you would make about $4 to $5 per book. So I mean, if you got the capital to go do so, you might want to go pick up a few hundred copies of these from your local Barnes & Noble, and you can make a few $100s right there. So those of you that are complaining about not having money, the money's out there. You just gotta go get it. My girlfriend always complains at me whenever I look at how much I could resell stuff for, but I'm just like, look, the money is out there. People just gotta go find it at the end of the day. If you need more money, somebody's got your damn money. Like I said, I just told you right now, Barnes & Noble has your damn money. So if you're complaining you don't got money to invest, you don't have money to pay off debt, I just told you, Barnes & Noble. If you don't have the capital to go spend few $1,000s on hundreds of books, then go buy 10 of them, $80 right there, $70, and you can turn $70 into what, about 140. So I mean, the money's out there. You just got to think, who's got my damn money, and how can I convince them to give it to me? That's what it's all about at the end of the day. So a little bit of motivation there. But hopefully you guys did enjoy the stream. If you did, definitely make sure to smash that like button. I greatly appreciate that. And like I said, if you're new to the channel, definitely consider subscribing. We'd love to have you here. And more so important than subscribing, check out our Discord group chat. I think you'll love just communicating with a bunch of like-minded individuals. And definitely feel free to share this stream, this video, once it uploads, with anybody that wants to possibly achieve financial freedom at the end of the day. But until next time, guys, keep on going out there, making your profits, covering your profits, smashing your debt, and achieving some financial freedom this year. And like I said, I'll talk to you guys probably in the Discord group chat some tonight and tomorrow. And I'll try to do a live stream. Just depends how work goes. Possibly tomorrow. And if not, for sure by like Tuesday or Wednesday. And then I'll have videos, of course, upload in between then. But until next time, guys, take it easy. Be safe out there trading. And have a good week. Take it easy.